Alright everyone, so in this video we are going to talk about the New York session. So we are going to talk about the AM session, the lunch, New York lunch, and then we are going to look at an entry model for New York PM session. So what we wait for, we are going to see what happened in the New York AM session, if price accumulated, if price had like a distribution, was there a manipulation. Then we are not going to trade in the lunch session, but we are going to use the lunch high and the lunch low to look for entries. So basically what we look for is when we have our price action for the day, this is AM, going into lunch, and as soon as the PM session starts, we want either the highs or the lows of the lunch being taken out. Then we are waiting for an inverse fair value gap to form, and we are going to enter immediately, and we are going to target a fixed 1 or 2 risk to reward trade. So let's quickly, nice and easy, wait for lunch session highs or lows to be taken. We enter from an inverse fair value gap and we target a fixed 1 or 2 risk to reward. So let's get straight to the charts. Alright, so I'm here on the 1 minute, as you can see on NASDAQ. The indicator that I have active is the Price Action Toolkit by Flux Charts. Go check them out. Link is in the description. Go check them out for this premium Price Action Toolkit indicator. So I have enabled the inverse fair value gaps, and I also have the New York session, the morning, lunch, and afternoon session. So remember what we said? So we can clearly see right over here, AM session was in a nice downtrend. We accumulated a little bit here in lunch session. So let's mark out the lows of the lunch and the highs of the New York lunch session. So let's play price forward and see what happens. So this is the PM session starting right over here. So now we just wait for the high or the low to be taken out. As you can see right over here, the high has been taken out. So now we are going to wait for an inverse fair value gap to form inside of this PM session. There we go. So when we zoom in right over here on this close of this candle, and you can put your stops above the most recent high, and we can target a fixed 1 or 2 risk to reward trade. And let's play price out and see what happens. And as you can see, immediately we have gotten our TP, 1 or 2 risk to reward trade TP right over here. And then we took the lunch low. So let's play price forward and let's go to the next day. Alright, so here you can see AM session, lunch session. We can clearly see AM session took the highs here of the AM session. So the lunch took already the highs over here. So let's draw out the highs and the lows of the New York lunch. And let's see what happened right over there. There's the high. And let's see what happened. So the PM session is going to start now. There we go. So let's wait for the highs and the lows to be taken. There you go. As you can see, New York lunch has been taken, and now we wait for that inverse fair value gap to form. I skipped a little bit ahead. Just rewind a little bit. There we go. So our inverse fair value gap has formed. We're going to enter right over there, most recent highs. And we're going to target a 1 or 2 risk to reward, and let's see what happens. And we get stopped out immediately right over there. Let's play price forward. There we go. We have another inverse fair value gap right over there. Let's target a fixed 1 or 2. Let's play price forward. And there you go. As you can see, we got our TP right over there. So let's play price out, see what it did, and then we go on to the next day. All right, so we have our AM session, lunch session, and now our PM session has started. So let's mark out the highs of the lunch, the lows of the lunch, and let's see which one gets taken out first. There you go. As you can see, the lunch low has been taken. So now we wait for that inverse fair value gap to form. There we go. So we can enter right over there. In this case, I would put my stops at the body of the first candle because that one is a little bit too big for me. It's too far from there. So let's take one position, put it right over there, target a 1 or 2, and let's take another one just to see what's the difference between the two trades right over there, and then we target a 1 or 2 risk to reward trade. Let's see how this plays out. And as you can see, we got stopped out immediately. So that's one losing trade right over there. Now we wait for the next inverse fair value gap, bullish fair value gap, inverse fair value gap, sorry. There we go. Just fast forward a little bit too fast. There we go. There's our entry, stops right over there. And then we can target a fixed 1 or 2 risk to reward. And let's see how this one plays out. And we got stopped out right over there. Immediately there's our next entry right over there. Put our stops there and we can target a fixed 1 or 2 risk to reward trade. And as you can see, this one was a winning trade. And let's see how this one played out at the end of the session. And it went all the way up there. So in this session, we have 2 losing trades, 1 winning trade. So this is a break even day. So this one is a 0% gain. Let's go back. This one was a 1 losing trade, 1 winning trade. So this is a 1% gain on that day. And this one was a winning trade, so plus 2%. So in total, 3 days, 3% gain. That's how easy this strategy is. Remember to go check out Flux Charts Price Action Toolkit. If you like this content, please leave a like and subscribe, and then I'll see you in the next video. Cheers.